Sponsored by Chartered Financial Strategies. You are now watching Tax Bytes.
Welcome to another episode of Tax Bytes. Sean Monahan, Chartered Financial Strategies, and today is kind of starting a series of episodes or discussion on what is commonly misunderstood in regards to the risks, benefits, or whatever of filing a tax return and the benefits and skill in preparing a tax return. There's a lot of misconception in the client community of tax professionals as to the skill as well as the risks involved in aspects of your tax positions you take. And so one of the first places, the IRS sometimes it's misunderstood. The IRS is abusive. IRS really goes after clients and taxpayers, and there's some truth to that. But I'm going to say the first misunderstanding that comes up is the burden of proof for what goes on your tax return sits with you as a client or a taxpayer. It's really not the IRS's position for the most part, and we'll show how that's changed the last 15 years of the same series. But for the most part, they don't have the ability to assess your tax return very cleanly because you generally have all the records. They just have a tax return and some other forms, but that's another discussion. But the proof and the documentation for what is on your return, as well as why certain things are not on your return, sits with you. And I'll just give some examples. IRS comes to review your tax return and they want to look at your bank records. They want to get the bank records and look at all the deposits. And of course, your W-2 deposits, your paychecks, every other 2 weeks or so, paychecks go in and they can tally that up. And then they see maybe you got an insurance check for a car accident, insurance check for a home damage. You got another issue related to maybe is health reimbursements from an HSA, and those are deposits. Well, how do you prove that? They're seeing 6,000 here, 10,000 there, whatever. You've got to have the ability to prove that's not income. They're going to assume it's income. Even just the movement of monies between bank accounts can create the opportunity for the IRS to allege income. And you have to now prove that money came from another bank account or a bank account that's yours or something. Some that's fairly easy to do, don't get me wrong, but that may not show up on your return or shouldn't show up on your return, but you have to be able to prove why it shouldn't or where it is. And that concept is much more difficult for most people to understand and is somewhat trivialized. It's viewed as the IRS is abusive when really the position is that you need to substantiate or support or prove what you put on your return or didn't put on your return. You didn't put the insurance, check that was a reimbursement for the roof or a reimbursement for medical expenses. You didn't put that on there because it's not income. It's a reimbursement of an expense you incurred, and it shouldn't go there. But you should have records to show that receipts of the roof repair. An copy of the insurance check is the best thing you can do. And such and such insurance company paid you this. Those are very obvious. Even statements from your HSA, if you can get them, that shows a distribution. They're real basic things. But when those letters hit and you're coming to my office for that audit, people struggle with the most basic aspects of it because understanding how to prove things is its own skill. And it's not always easily understood as to how you have to do that. So this is a start into understanding the risks related to a return that's misunderstood, and hopefully we can kind of start kind of coaching along the way as not saying you can't do your return, but at least understanding the risks you're taking when you do, and you can assess more readily whether you're able to or not, as the case may be. So I hope this has kind of given a general conversation to the direction of your responsibility in regards to you preparing a return, or even if I do it or someone else does it for you, there's still a signature of yours on there, and you still have to be able to substantiate or prove what's on there. So, and that's why you have the records or should have maintained those records to support what's on the return. So bit long-winded, I know, but it's very understated. It's very trivialized in the advertisement of tax services. But this really needs to rise up in the community of tax services to better have the client base better understand their obligations. So Again, I hope you enjoyed something. Hope you learned something here today. This is so. Thank you for watching Tax Bites, and have a good day.